Hey, what's up YouTube? I am John and welcome back to The Wealthy Sailor, the place where we talk about finances, budgeting, investing, stuff like that, and we follow some of my financial goals, and I even talk about your financial goals if you guys message or leave a comment, stuff like that. Today we're going to be talking about a couple different things. So, little news about the channel, big news to me. I just got a care package in, so I have some new t-shirts. So instead of seeing the same like 6 t-shirts every video, I have a whole 4 more, which means I have 10 t-shirts now to wear while I'm deployed. If you haven't seen the video before or the channel before, I'm actually currently deployed. So, I get care packages and stuff like that, and that's also why my background looks like this. And I get a lot of comments or, well, messages about the background. So just cut me some slack, I'm working on it. Today, I want to talk to you about a question that I got. I basically got a question about, given my age, how I was able to save as much as I have. And this comes from the fact that I talk a lot about my net worth and how much that is. And I think there's some confusion on how I was able to get it, because I always say I'm bad with money, or at least I have been bad with money in the past. And a lot of my net worth currently comes from 2 different sources. One is equity in a property. My first home I bought back when I was stationed in Jacksonville. And the second one is retirement accounts. So the retirement accounts I'll go into in another video, really. But I want to talk to you about the house thing. So if you're a veteran or you're thinking about maybe joining the military, I'm not trying to push anybody to join the military. It's a very complex decision. It requires a lot of thought and discussion with loved ones and stuff like that. But if you do end up in the military, or you're currently in the military or have served, I'm a full advocate of using every benefit you can get. My simple logic is that the military, it kind of takes everything it can from you. I'm not saying it's bad, but they are going to get their money's worth from you. So make sure you take advantage of every benefit they offer you. One of which is a VA loan. VA stands for Veterans Administration Loan. It's for home purchases. So many good things with this loan. So that's what we're going to talk about today. So I joined the Navy back in 2007. By the time I got done boot camp, A school, and everything, it was 2009. I went on deployment on a ship. I came back, and I would only be at my duty station at the time for 2.5 years. So I figured that was enough time to buy a house. Plus, at the time, I was still low ranking. I was an E4. I was married to somebody who didn't have a job, who was still in school. We didn't have the finance for it or the credit. So 2011 rolled around. We went to Greece for a year, came back. It was now the end of 2012. And then that rolled into the beginning of 2013, and I just got ordered. I was really happy because I finally got short orders. So I was on a ship in Washington State, and then I went to Greece overseas, which are unaccompanied. And then I finally got stationed at a short command for 3 years. I was super excited, and I was there for 2 months before I volunteered to go to Afghanistan. That did not help my marriage at all. Well, my previous marriage, because this led directly to the end of the marriage. But one thing it did do is it gave me a lot of confidence, because I knew how much money I'd make when I'm deployed. If you've never served in the military or anything, there is something you should know, and it's if you're deployed to Afghanistan, one, all your pay is tax-free, and the other thing is you get a lot of incentive pays and family separation pays and stuff for going over there. So I went over to Afghanistan. I knew I was going to be making some good money, so before I went, I was looking at the housing market, and I've been tracking the housing market for a couple years. And in 2008, it crashed, but by 2014, or 2013 rather, it still wasn't completely recovered. So I'm watching it, I'm like, in a year, it's gonna be really recovered. So as soon as I got the orders, we made a decision, like, we should buy a house now. Because in a year, I have no idea what the housing market's gonna be like, and it could be double what it is now. We won't get the same value. So we should buy a house now. Now, when we did this, we were stretching ourselves pretty thin. I was an E5, and she wasn't working. So we went and we bought a 3,600 square foot brand new built house, because it was still cheap because of the housing market crash, which was actually really nice. So we used our VA loan for it. Very first thing I did was I checked my credit. Luckily, I've been working on my credit for years beforehand, and my credit was about 750 at the time, which was pretty good. We had 0 money for a down payment. So we went with a VA loan, because that's really the only thing you can do, because I don't know if you guys know this or not, but with a VA loan, you're not required to have a down payment. But you do have to pay for fees. You have to pay closing costs. Well, the fees are included in closing costs. You also have to pay for things like home inspection a survey. Now ours was a brand new build and it came with a warranty, so I did not get a home inspection and I did not get a survey. I should have gotten a home inspection no matter whether it's a new build or not. And if anybody ever asks my opinion on it, I'll be like, listen, I did it, I got lucky, but I will never do that again. I will never buy a home without a home inspection because it's too dangerous. So we do that. After I check my credit and everything like that, and we scrape together enough money for stuff, I go and I immediately, before I even contact a realtor, I start going online to find out what we want and what we can afford. Now, I use Zillow for this. Zillow is a great program for finding a house. Zillow is awful at telling you how much that house is going to cost you when everything's included. When you're playing with Zillow, it has a built-in interface for you to see how much your rent or your mortgage would be per month and stuff like that. Now, at the bottom of that, it has a thing, check mark, for you to include insurance, PMI, taxes, stuff like that. Make sure you click that because otherwise, I mean, literally, your mortgage could be twice as much as what you're looking at estimating. In addition to that, sometimes when you're doing different financing schemes, they'll be like, oh, no closing costs. Well, they roll closing costs into your mortgage. So it inflates your mortgage even more. So be careful with that. So you go on Zillow, you kind of get an idea of what you can afford and what you want. What I would recommend is if you're using the numbers that Zillow provides, figure it's going to be about 25% more of whatever you're estimating. It's not going to be that much probably, but if you estimate that's going to be 25% more, you're good. So if it's saying a $750 a month mortgage and you're thinking $1,000, like you're budgeting for $1,000, you'll be good. So don't even worry about it. I would say. Again, not an expert, so this is just my opinion. So when you're doing a VA loan, once you finally realize how much you're kind of ballparking, now you can call a bank because you have to get pre-approved because most realtors really won't pay any attention to you until you get a pre-approval letter. Now, if you call a realtor and you're like, hey, I'm interested in buying a house, a lot of times they have money people or mortgage people that they'll recommend, but they won't, I'm not going to say they won't, but from the realtors I know, they don't really like showing houses to people who aren't even approved for the money yet because they know being approved for the mortgage is like the hardest thing. It's easy to go open houses. It's hard to get the funding to be able to purchase that house. So call your banking institution, lending institution, whatever you want to do, guy your mortgage or a mortgage lender, whatever. Get pre-approved. If you're a veteran, you're going to need either your DD-214 or a letter of eligibility. Letters of eligibility are for if you're active duty and still in there, or you can get one from the VA website. I got one from my admin at my command, and I asked for it, and I had it like 3 or 4 hours later. They were super cool about it. Now, I'm not sure if that was just my command or if that's how normal admins do it. So if any veterans have any stories about it, please let me know. But we were able to get that super quick. I have my letter in hand, I call my bank, and I apply for the mortgage. Okay, they ask you all the preliminary questions, net worth, income, they run your credit, stuff like that. Now, they ping your credit, so it will make your credit go down a little bit. By my experience, it's only a couple points. But once they do that, for 2 weeks after that, you can now have other companies run your credit too. So let's say you have several banks. Like I have USA, Wells Fargo, and Navy Fed, and Ally. So I can have all 4 of them pull a mortgage thing on me. I can compare rates, and then in some cases you can even be like, well, Wells Fargo's offering me this, but what will you offer me? I wanted to go with USA because they're my primary bank, but they just weren't offering me anything good enough, and even when I called them and addressed it, they couldn't offer me anything better, so I couldn't go with them. So I'm like, okay, fine. So I got rid of them, and I ended up going with a small lender, but they offered me the best rate. So you figure out who you want to go with, you have a pre-approval letter, you pick the best rate, now you're ready to start shopping for houses. Now, with the VA loan, they have a few rules. You cannot use the VA loan if the residence is going to be a rental. You can refinance it if it's going to be a rental, or you can buy multifamily houses up to 4 units. So if you were to buy like a duplex, like let's say you're military and you deploy a lot, you can get like even a quadplex. You can live in one of them, rent out the other 3, be relatively rent neutral or mortgage neutral, and that the VA will cover for all that, up to 4 units. I think the reason it stops at 4 is because anything above that, I think you start getting into like apartment building, like business things, and I don't think the VA is good for that because the VA doesn't do business loans. So you're shopping around everything, just keep in mind that the VA wants you to live in that property for 2 years. So just, if you're only deployed for 3 years in an area, I would suggest you get your property pretty much as soon as you get there. That way you can build up 3 years of equity. I know some deployment locations, I think other branches of service do longer deployments, but in the Navy it's pretty much 3 years and then you move. I think in the Army, somebody told me they were deployed places for like 5, 6 years at a time. And same with Air Force. If that's the case, more power to you. But I really suggest you get it as early as possible because you're getting that BAH anyway. So as long as your mortgage falls within your BAH, for those who don't follow military, BAH is basic allowance for housing, and it pretty much gives you a stipend to live in an area, and it adjusts for different areas. So like New York, the BAH is going to be a lot higher than like um, Mississippi. But a lot of military members, what they do is they try to get their mortgage for less than their BAHs. That way it's completely covered by the military and stuff like that. So if you do that, you're good. Then your BAH just goes straight to your mortgage. But here's the thing. Instead of paying rent, you're collecting that equity. You're now getting 3 years of equity for really nothing. So that's the reason I suggest you buy the house. But you want to make sure you're there for at least 2 years, and the longer you're there, the better it is, because the more equity you build in the house, which means when you leave, you might not have to sell it. You could just rent it out. Which brings me to another point. The reason I was able to use my VA loan the way it was is because the VA loan has a total cap for different areas, which means that you can buy, if they're cheap enough properties, you can buy as many properties as you want as long as it falls under a certain amount of money. But when I bought my Jacksonville house, I paid $205,000 for it, well within the limits of the VA loan for the time and for the area. When I went to Virginia Beach, it was $317,000. So when I went to buy that, I think about $15,000 of it was not covered under the VA loan. So even though it's packaged as one loan, like meaning I only pay one loan, I did have to pay regular fees and stuff on the remaining like $15,000 of my loan, which luckily wasn't that high because it's only $15,000. But it was unexpected, and we had to pay for that. And you have to pay all the regular fees, the 20% down, all that stuff. But again, only on the $15,000. Now, as of now, my VA loan completely used up. Luckily, my fiance has access to a VA loan too. So if we want to do, or well, rather, if she wants to get into real estate investing, she has full access to that without me inhibiting her. Now, if I want to free up my VA loan, what I could do is refinance one of my houses, and if I have enough equity built in to cover the down payment, 20% down or whatever the banks want, then I'm good. If not, they could actually want you to put down payment down. Even though you're refinancing, you could have been good for 10 years and paying it. It depends on what your bank wants and what you're able to negotiate. You can also refinance within the VA system. So if I have a VA loan for the house in Jacksonville, I can refinance it. I can keep it as a VA loan, and I can either keep the equity in it and lower the monthly payments, or you could pretty much start the whole mortgage over again, take the cash out. Depends on what you want to do with it. I'm a big advocate for keeping equity in the homes unless you need it, and I mean need it. I'm not going to take it out because there's nothing I need it for. I don't need a car. I don't need a boat. I kind of want a boat, but I don't need one, so I'm not going to take the cash out for that. It's an emergency thing, and it's part of my net worth, which is how I'm measuring my progress with these videos, so I definitely don't want to do that. So VA loans can be used for a lot of things, mostly single families, but you can also do manufactured, you can do ready-to-build homes, you can do townhomes. It gets a little weird when it comes to condos. So just keep that in mind. From what I understand, I haven't tried to buy a condo with it yet, but sometimes they let you, sometimes they don't. It really depends on the condo and stuff like that. What the VA is doing is they're trying to ensure that you're not getting you're not getting screwed over with this. So if you try to buy an old home, the VA might send their own inspector to check the home, and if it's not up to VA standards, they're not saying you can't buy the home. They are saying you can't use the VA loan for that home. So if you can find traditional lending, you can do it. But that's what happened with my mom. My mom's a veteran, and when we moved into a house, it was like a 60-year-old house at the time, and the VA just said, no, we're not covering you for this house. So she had to come up with the down payment in order to buy the house anyway. And it worked out fine. I mean, the house, we had it inspected, and to be honest, it wasn't a great house, but it was good, and we fixed it up and stuff. So I mean, it was a fine buy, especially for the price at the time. Amazing for the price at the time. But we were able to get through it. I'm just letting you know that that is a problem you might run into. So they won't let you use the VA for investment properties. So I understand why they do that, because honestly, you run a risk of losing it, and they're not trying to lose their investment. If you guys don't really understand how VA loans work, the VA doesn't give you money. The VA is pretty much ensuring the bank that you'll get your money, which makes it easier for the bank to lend to you. But you're not getting any money from the VA. So it's a loan product, kind of, more than like them actually granting you a loan. You still go through private lending organizations, and because of the VA, they ask some more questions and everything like that, but usually it's less stringent. I've known people with lower credit scores who've gotten it. People with no down payment money have obviously bought homes and stuff like that, and it's really helpful for service members. So at the end of the day, what I really want people to take away from this, if you're a service member, please take advantage of that and do it as early in your career as possible. As soon as you're at a command, and you're going to be there for a while, it's probably best for you to buy a home, even if it's something small, because otherwise you're taking the money that the government's giving you and you're paying off somebody else's mortgage with it, or just putting money in their pocket. Be that guy. Be the guy who's making the money off it rather than the guy who's spending the money on it, in my opinion. Now, of course, this doesn't work with everybody, and I know everybody's situation is different. I get that. But it is something I want you guys to consider. So if it was me and I could do it again, I would have bought a house at my very first command. As soon as I got there, I would have purchased my home if I could afford it. And that would give me probably an extra property, or maybe two by now at this point in my life. And that would just make me further ahead. I would be, if I bought my first home, my first joined Navy at 23 I would have been at that time, then I would be almost halfway paid off on that mortgage. Which might not seem like much because I'm not living there, right? Except in 15 more years, I'm collecting that entire rent. And, that's just money in my pocket. So it's something to consider. Anyway, guys, thank you for watching. I really appreciate it. I love all the feedback I've been getting. It's pretty awesome. Anyway, guys, I hope you enjoyed the video. Give me a like, a share, subscribe. Thank you for watching, and keep saving.